Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your favorite brothers here, your broskies, your dividend investors, guys. You've been rocking with us, not just for the last 5 years, but hopefully for the last 10 to 11 years here with the Dividend Diplomats. Today is all about a certain dividend aristocrat stock that took an investment of $1 billion from a massive asset managed firm. And what does that mean for this company and what can come next?
Smash that subscribe button, everyone. Give this video a thumbs up. How about your boys? The Dividend Diplomats, the greatest channel in the world. God, I can't wait to talk about this stock. This was quite the news, Landy. This one was a lot of fun to watch.
Quite the news, big headliner over the last week, guys. To rip the Band-Aid, Goldman Sachs, which ticker symbol GS, had invested. They put in $1 billion of an investment into Rowe Price, ticker symbol TROW. Many dividend investors out here, Bert and I included, own Rowe Price stock and have probably for well over a decade now.
Yeah.
They were actually my first investment management firm that I had ever done any investing on. Props out to Rowe Price. Now, guys, they took in $1 billion from Goldman Sachs, and this sent the stock surging up to about $115, almost $116 per share from about $105. So they went up almost 10% on the news. Now, since that happened, they have definitely retreated back to the norm. They're now trading at just about $108.16 as of the end of September 5th. We are recording this September 7th. So the news was great, but it's like, wait, why would a large company such as Goldman Sachs do such a thing?
Yeah, and that was really the key to it. It was also the dollar amount great. $1 billion is awesome. Don't get me wrong. I'm not going to talk about that. They manage trillions of dollars. It's about what they're going to be doing with the $1 billion. And they announced that they are going to be working with T. Rowe Price through a joint venture to get retail investors to allow them to access and invest in private assets. And that's going to be huge.
Oh, yeah. Massive.
Yeah, and you've seen a lot of this too. Other places like your SoFis, even Fundrise, which I've talked about here, how I've done there, where you get into some private markets, Robinhood, other places are trying to get individual investors into this retail space. That's why this was such a big news. $1 billion from a massive investment bank in Wall Street into a place like T. Rowe Price to build that functionality out. That is major news.
Yeah, I mean, Goldman Sachs selected T. Rowe Price, and T. Rowe Price accepted this selection here, guys, because they wanted to connect to all those retirement and retail investors that T. Rowe Price has in order to gain the breadth of investors that Goldman Sachs is potentially looking for as it relates to those types of assets. Again, think real estate, think potentially maybe digital currency at some point, think maybe hedge fund, private equity type fund investments. As Bert mentioned, SoFi has started offering on their platform, and many others are starting to try to figure it out. So Goldman has gone the route to partner with T. Rowe and to do that. So, but what does that mean? Well, that means that maybe when you're looking at your 401k options, if T. Rowe Price is your provider at where you work, maybe you'll start to see some of that as an offering. Because as Bert said, the joint venture is going to be some target date funds that are more hybrid in nature, right, Bert?
Yeah, that's right. And I want to pose a question to you, something to think about on this, Lanny. T. Rowe's typically been pretty conservative with their funds, right? Like they've been ultra conservative. They've been a slow mover getting into these funds. They're now getting into private markets. What does this mean for some of the other sectors too that could be coming down the pipeline? Like, is there another thing that they could allow their investors to get into that, say, like Vanguard and Fidelity have already gotten to, where you might not necessarily get it with T. Rowe?
I don't know. You tell us, Bert.
Well, I was thinking crypto. I guess you can't purchase crypto directly on there, so that might have been the wrong comparison. But
I don't think Vanguard offers.
no, I was thinking through the funds, but that's not the right comparison here. Can they get into the cryptocurrency game now too through different joint ventures if this private market joint venture is successful?
Yeah, and this could be one of many too. Yeah. The way that I'm looking at it is 100%. If T. and Vanguard and maybe some of the other asset providers, even I don't know if Schwab even has a product yet. maybe instead of creating one, maybe they just piggyback with a Goldman or another wealth management firm that already has something maybe built to funnel that to where maybe their name is not fully on it. Maybe it's offered by somebody else.
Yeah, and maybe this is how they combat all of the crypto players that are out there, where each one of them are doing their own version of stablecoins. They're all doing their own version of this. Maybe just the big asset managers doing their own joint ventures to provide their muscle behind it is the best way for them to compete with these other giants.
When you think about it, T. Rowe Price needs this because they don't want to see their assets under management leave to go to another asset class, private investment, digital currencies, your Bitcoin, maybe Ethereum, maybe FBTC over at Fidelity, or like Bert said, a USDC stable type coin.
People want it. Like the demand
Exactly.
is there.
And then it's like, well, if Goldman's making a $1 billion purchase of, equity in T. Rowe Price, again, 2 to 3% of what T. Rowe Price is T. Rowe Price an undervalued dividend stock to buy? And that's why we're here on the Dividend Diplomats channel to see if they are an undervalued dividend stock to buy right now. We're going to look at the PE, the payout, and the dividend growth rate on T. Rowe Price. Bert, hit him with that sweet chin music on the dividend metrics.
All right, the price is 108.16. That earnings per share is 920. Price earnings ratio 11.76.
There it is, guys. What do you think about that, Bert?
Awful. One of the worst PE ratios I've ever seen. Terrible. I mean, it's below the S&P 500, lower in the space compared to some of the asset managers. I'm kidding, guys. It's fantastic. Trading at a discount. Love it. That's a first check mark. Lanny, what about number 2?
And again, they pay, a nice dividend. They pay $1.27 per share per quarter, or $5.08 per year. That payout ratio has historically always been safe, and it still is safe at 55%. Could we prefer under 60% if we can? So it is a very solid payout ratio.
The 5-year dividend growth rate's 8%. They've increased it for 38 years. Although dividend growth in the last few years is slow, that's front loaded on the 5-year front.
Yeah. And again, I think they've been, managing their balance sheet well. They've always have done that. And so what if dividend growth hasn't been strong in the last, 3 years, but those year 4, year 5, those horse years, maybe they understand that. And they're like, well, we'll get back to that as soon as we get some of this stuff behind us to get back to big earnings growth.
I would agree. And their yield is 4.7%. So it's down from the 5%, which we saw recently, but it's still well below that lower point yield, which we typically saw with T. Rowe, which was around that 4 to 4.25.
Now, even after this investment, guys, again, they popped to the 115, which probably kept them around flat for the year, but they're actually down year to date, almost 5%. They are up slightly since September of last year by about 4.5%. But as an investment, they've actually been down 13 to 14% in the last 5 years for T. Rowe Price. So it hasn't been the best investment from a pure price standpoint.
No. So to summarize, PE 11.76, payout 55%, 5-year dividend growth rate of 8%. Increase that dividend for 38 years, and that yield is at 4.7%. Lanny, are you buying T. Rowe?
If they drop back, to 100 or below, yeah, I'll buy. I'll probably buy, $500 worth at 100 or below.
Yeah, I would agree. It's not that far off. We're not that far from that level of a drop. It could easily happen, especially if market conditions worsen. So let us know what you guys think. Are you buying T. Rowe? Are you loving them after that $1 billion investment? Is $100 per share or below a good price point for T. Rowe?
Yeah, let us know if you're like Goldman Sachs and you're about to throw in maybe not $1 billion, but are you throwing 1K at it, 10K at it, $100 at T. Rowe Price at the current price levels? Let us know in the comments, guys. Like the video, subscribe to this channel, and you jabronis, you're either with us or you're against us. Jack, that was Bert the Hurt Locker and Lanny from the Dividend Diplomats, over and out.